अस्सलामुअलैकुम फ्रेंड्स, वेलकम टू माय चैनल। उम्मीद करता हूँ कि दोस्तों आप लोग खैरियत से होंगे। दोस्तों, आज की वीडियो का हमारा टॉपिक है इम्पोर्टेंस ऑफ डिफ़ॉल्ट रेट्स। अगर आप चैनल पर नए हैं तो पहले जाकर हमारे चैनल को सब्सक्राइब लाजमी करें ताकि इस तरह की वीडियो हम आपके लिए लाते रहें। सो फ्रेंड्स, बगैर देर किए हम जाते हैं अपने टॉपिक की जानिब। द इम्पोर्टेंस ऑफ डिफ़ॉल्ट रेट्स। Default rates are important for lending institutions to measure their risk from borrowers. If a lending institution finds that they incur a high default rate, it is an important indicator for them to review their lending procedures. A higher default rate leads to a higher rate of risk for the institutions. By aiming to lower the default rate, the institutions can protect itself for any major losses with borrowers who default. Certain groups are more likely to default than compared to others. For example, it would typically include people who are young, unemployed, or living in a single household. Alternatively, default rates may be representative of economic conditions. Default rates are high during periods of economic pressure and low during periods of economic growth. Default rates may also be applied to situations outside of lending, such as bond default rates or even corporate default rates. Period until default after last payments. Routinely missed payments. Lending institutes may implement consequence for borrowers which routinely missed or late payments. One strategy a lender may implement is to increase the interest rates on the borrower's remaining loan after delinquency. The substantially higher interest rate is referred to as the penalty rate. The lenders may decide to lower the penalty rate if the borrower successfully makes on-time payments. Another strategy allows the lending institutions to take hold to personal assets after a defaulted loans. Personal assets may include property, wages, retirement, savings, or investments. For example, upon taking ownership of a property, the bank may recover some of its losses on the loan. Through the process of foreclosures, they can sell the property. Both strategies allow the lender to reduce their potential loss of the defaulted loans. Additional resources. CFC offers the commercial banking and credit analysis certification program for those looking to take their careers to the next levels. To keep learning and advancing your careers, the following resources will be helpful. Number 1, allowance for doubtful accounts, default risk premium, loan servicing, probability of default. Understanding the default rates. It is the borrower's responsibility to make on-time payments as per the initial agreement with the financial institutes when they are through a mortgage payment or a credit card agreement. The borrowers may fail to make the payments to be considered a defaulted consumer loans. Multiple consecutive payments have not been received over several months. Defaulting on a loan will damage the borrower's credit score, making it is difficult to receive approvals on loans in the future. Even if a future loan were to be approved, the low credit scores would likely lead to much higher interest rates on loans. Before being considered on a default loans, a loan will be missed payments is a delinquent loans. The period in which a loan is delinquent is the duration in which the lending institutions allow some time to pass before declaring the loans defaulted. During such a times, the borrowers must act and make up the missed payments to avoid the consequence of a defaulted loans. If the borrower still does not make up their missed payments, the lenders will eventually write off the loans and declare it to be in default. The time frame for the default may vary depending on the type of loans. For students loans. सो आई होप फ्रेंड्स आज की वीडियो आपको हमारी अच्छी लगी होगी। मिलते हैं अगली वीडियो में। अल्लाह।